Hello students, in this video we will discuss about the indexation benefit available on long-term capital gains. So what is the indexation benefit if the transfer has taken place before 23rd July? I have just made a table on it. We will see guys depending upon the type of asset. If the asset transferred before 23rd July is a bond or debenture, sir, is indexation available? No, it is not available. Then if it is a capital indexed bond issued by the government, yes, indexation is available. Then even if it is a sovereign gold bond issued by RBI under sovereign gold bond scheme 2015, is it available, sir? Indexation is available. But if it is redeemed by individual and all guys, it is completely exempt. But if it is redeemed by others, yes, it is taxable. When it is taxable, is indexation available? Yes. And actually, one of the disappointing thing is government has discontinued the issue of new sovereign gold bonds. But whatever would have already been issued, definitely they will be redeemed on time, guys. Yeah. Coming to depreciable assets, that is when section 32 fails, immediately section 50 will take over. We will always compute short-term capital gain or loss there. Then, in case of unit of specified mutual funds acquired on or after 1st April 2023 or market-linked debentures, we will compute short-term capital gains under section 50AA, always short-term, irrespective of the period of holding. So even here, there is no indexation. In both these cases, there is no question of indexation as we compute straight away short-term gain or loss. Then coming to, and one more item has been added under section 50AA guys, but I am not given here purposely because, sir, this what I am discussing is before 23rd July. What I am discussing is before 23rd July because one more item, whatever is added, I will just show you. That is from 23rd July. That is unlisted bond and unlisted debenture which is transferred or redeemed on or after 23rd July, guys. Okay. Next. Equity share in a company on which STT is paid both at the time of purchase as well as transfer. Then unit of equity oriented fund or unit of business trust on which STT is paid at the time of transfer. Guys, both of this are covered if it is a short term under section 111A, if it is a long term under section 112A. Sir, can I claim indexation? No. Section 112A itself tells no indexation on the long term capital gain to be computed as per section 112A because they give some tax rate benefit there up to 1,25,000 it is not taxable and also indexation is not available. Okay, then if it is any other long term capital asset, indexation is available. This is only if transfer takes place before 23rd July, but from 23rd July our madam took back the indexation benefit except on land and building, guys. What is it? We will see. As per section 48, no indexation benefit is allowed on long-term capital gains arising on transfer of any capital assets takes place on or after 23rd July except, means on the following it is allowed. Land and building which is transferred by resident individual or HUF on which indexation is optional at the benefit of assessee. It is optional. They can see where the benefit is there with indexation or without indexation and accordingly take it. Yes, sir. Guys, please be very careful. Here, this is only for the transfer which has happened on or after 23rd July. Sir, what asset has been transferred? Land and building. By whom? Resident individual or resident HUF. Okay. And this property should have been acquired by them before 23rd July. Obviously, it would have been acquired by them before 23rd July only. That is when it will become long term. Yes, for our previous year, yes, it will definitely be a long term because it would have been acquired long term back. Now, sir, they are selling it on or after 23rd July. It is long term. Can we claim indexation? Yes, only if the assessee is a resident individual or HUF. But indexation is given as an option for them. Okay. A resident individual or HUF, while computing tax on long-term capital gain on transfer of land or building or both, has the option to take the benefit of indexation under section 112 in respect of long-term capital gains arising on transfer of land or building or both which is acquired before 23rd July. So it was purchased before 23rd July but sold after 23rd July and transferred on or after 23rd July, guys. Accordingly, long-term capital gain on the transfer of such land or building or both are subject to lower of tax at 12.5% on long-term capital gain computed without indexation benefit or 20% on long-term capital gain computed with indexation benefit. Guys, one important catch point here is please be careful. Whenever you compute long-term capital gain on the transfer of land or building which is transferred after 23rd July by resident individual or HUF, first calculate the long-term capital gain without indexation. Add it while computing the total income under the head capital gains. Only while calculating the tax liability, the assessee has this option of taking lower rate or higher rate. I repeat, let me give an example and explain it. Guys, assume the assessee has transferred the land or building. He has a long-term capital gain of 50 lakh computed without indexation. So this is without indexation. Yes, sir. And if with indexation, if we calculate, sir, the amount is coming to assume 30 lakh. This is with indexation. Okay. Sir, now what do we do with this? Guys, while computing the total income, please include 50 lakh, entire 50 lakh under the head capital gains. Now coming to calculating the tax liability, what should we do, sir? On 50 lakh, as it is without indexation, apply 12.5%. And on 30 lakh, the tax rate would be 20%. On 30 lakh, it will be 20%. So go with whichever is lower. Go with whichever is lower. This is only while computing the tax liability. Please be very careful. And while computing income, sir, should I take 50 lakh or 30 lakh? It is always 50 lakh. Hope it is clear for you. And about the tax rates on capital gains special income, I will discuss it with in the next video, guys.